Hey guys, how's it going? Welcome to the London session recap for Monday the 25th of July 2022 on Euro Dollar. So I brought bar replay basically back to the start of the weekly open because, well, today too long going over this because hopefully you should have already seen the weekly market breakdown where, I break it down in depth. And if you haven't seen it, then probably a good time now to pause this and go and watch that if you haven't done so already. But very simply, daily is in a nice clear bearish trend with a very clear swing range. We know we're coming off some old weekly demand and obviously a major level being parity at 1.000. So expecting a pullback, what's the simple framework we look for? We look for price to pull back up to premium levels of supply, where we have some levels here with varying degrees of confidence, but basically looking to play this pullback up towards those levels, whilst completely bearing in mind that price does not have to pull anywhere near there, right? It can form that lower high at any point and then want to target that weak structure. But obviously we use our lower time frames to help guide us as to when potentially that lower high may be in place. Now the 4-hour chart, kind of quite a large expansive swing range as well. Okay, so looking for that swing lower high to again form at any point, right? And it can come down and then target, that weak swing low. So we've had pretty much a pullback to the EQ. We haven't quite met it in terms of like exact pips, but for me, it's just a rough guide. It's there or thereabouts, right? It's a rough pullback to value. So there's a decent chance the lower high could be in place. But remember, if we look at internal structure, so we had this internal higher high there with the bullish IBOS, then internal pullback, and then an internal higher high again, right? This is the framework that we use to give us true sort of confirmation for the start and end of swing pullback. So whilst the internal structure is bullish, that means that swing pullback is still continuing, okay? It's only once we get that bearish IBOS that now we have true structural alignment, where we have the internal structure realigned with the bearish swing structure, and then we expect those bearish internal ranges to hold until it takes out that weak low, okay? So you don't have to wait for that bearish IBOS to come in to look for shorts to target that. If you think that swing lower high may be in place, it's just that we don't have true confirmation of that until we get that bearish IBOS. Okay, so we've swept the liquidity behind this high as well, only just by about a pip. There's not really any significant supply that we're rejecting at this point. Again, it doesn't have to, especially when we swept liquidity, yada yada yada. But there's a lot of confidence here to suggest that this 4-hour internal structure is going to continue, and that was sort of my main, let's say, bias coming into the week ahead, because we've come into the strong 4-hour low, we've swept liquidity into this demand, we've had a nice, reasonably V-shaped reaction. We got a bullish change of character as we took the fractal high there, right? Because price came down, up, down, rejected that strong 4-hour low. Fractal structure now realigns with the internal structure. So now we have a level of demand to potentially look to at least take out this weak high and then potentially up towards these premium levels of supply. So I could keep things super simple. Yes, the 4-hour swing trend is bearish and we expect that lower high to form at any point. But whilst we have nice, clear, large internal structure being bullish coming into this low with a bullish change of character here, back into demand, then looking for longs to take out this high. But just, always accepting the fact that, that could roll over and we could start to get that swing lower high at any point. So I think the 4-hour is pretty clear. Obviously, this is a bit of a choppy sideways range, and we could mess around here or whatever. But the thesis remains as this is a strong low, bullish struck into demand, looking for that continued movement there. Now, when we get down to the M15, it gets a little bit more complex, okay? Because we do actually have bearish swing structure. Because after we took this high, where was the lowest point that took out that high after it was created? It's obviously down here, so this was the swing low. Price then eventually came down and broke that low. So now this becomes a strong swing high, and this becomes the weak swing low, right? That's the trading range we are trading within, which is bearish, which is obviously against the 4-hour internal structure I was just saying. So again, don't want to speak about this at length because we've talked about it a lot in the weekly market breakdown, but this is that strong 4-hour internal low. So we view this as just that 4-hour pullback, that complex pullback into that low, which we've now mitigated that level of demand, swept all of this liquidity. We're now looking for that next movement to the upside, right? To take out the weak 4-hour internal high. But obviously that's against what the bearish swing trend is on the M15, because that's what we'd expect here. So when we don't have true structural alignment, obviously it can get a little bit tricky. But that's where I'm always going to weigh more importance on the higher time frame, because the higher time frames take precedence over the lower time frames, right? So if we've mitigated here and have had such a strong reaction away, all that other confidence we said, I'm happy, especially in this instance, to look for longs against the swing trend, especially with, this was, just about close above. It's a big sweep to the downside. You can almost just view that as like a big sweep liquidity and a break there. So it's a little bit tricky, especially if you're kind of, new and following the beginner trade plan, because, well, the M15 is bearish. Being mechanical, you want to follow shorts, that's absolutely fine. But when we get these more slightly complex scenarios, this is where you kind of have to have that deeper understanding of price. But hopefully you're kind of following with me so far. So now we know how we have this bearish M15 swing trend, but we've mitigated the strong 4-hour low. So really from a 4-hour perspective, we're expecting this movement here. However, we have to be aware that price could just pull up into this strong M15 high, right? And that bearish swing trend could continue, and that might lead then to the bearish 4-hour IBOS. And then we would have true structural alignment. If we got that movement where the 4-hour internal structure then shifts bearish, okay, boom, now the M15 has had another bearish break of structure to the downside. The 4-hour internal is bearish, aligned with the 4-hour swing being bearish. Everything's bearish basically. And then we look for that pullback into, a nice level of M15 supply. This is when it's super high probability because it's all aligned. And now we can then go down and target this weak low here, right? But at this point, we don't have that. We have conflicting signals. So this is when you just have to be open to both possibilities, maybe be a bit more aggressive with your targets in terms of any positions that you do take, because we never fully know we never fully know, of course, which way price is going to break out. We can just try and use our frameworks to give us some probabilities. So again, this is the 4-hour structure, right? The internal structure. And then we came into that low and we're expecting that next movement. But we're aware that the M15 lower high could form and we could then have that bearish IBOS. Okay, that's kind of the two main ways. Now, we can break down the M15 swing trend even further, right? We know that's the weak swing low. We know that's the strong swing high. Okay, cool. But, how can we kind of trade the structure within the middle? Because we could obviously see some, nice highs and lows from within here, right? So sort of let's, the first thing you might want to do is try and kind of get what I call like the larger internal structure. Okay, so back when we had this swing range here, price pulled back, all right, and then we came up here and then broke that high there. So you can start kind of mapping your internal structure here. So we had that break to the upside, and then this would be the internal low, right? So we had that up movement, down movement, we had a bullish IBOS, then we had the bearish IBOS here. Okay, so at that point, that's your internal high, your large internal high, and that's your large internal low. So we come up and break that high there, okay? So that's why, if you see this, the strong internal low, I marked that as there and there. So that's sort of the larger internal range we're within, right? Because this is where prices mitigate that 4-hour supply and then had this internal break to the upside. So hopefully you can follow with me. This is the bullish, large internal range between these two orange lines, but we're also aware that the swing structure is bearish, okay? So potentially this large internal structure has only shifted bullish to do what? To mitigate the swing supply, because remember, internal structure shifts bullish to facilitate a swing pullback. So I appreciate this can get a bit confusing. So I'm going to try and take my time with this, and just bear with me, guys, who you totally have this nailed down, but just need to get that in there for everyone else. So let's draw this on, right? Swing trend, swing lower low, right? Because we break that swing low. So we have a swing lower low. Right, and then we're expecting what? Swing pull back up into supply. Obviously, it doesn't have to reach extreme, but essentially expecting that movement to then continue that movement there, right? That would be your swing structure. Let's draw the internal structure. Just going to change this for a minute, make this a little bit thinner. And let's make it, say, blue, all right? Cool, nice and pretty. So then we have the larger internal structure, which essentially, it can get a bit complex with always knowing kind of where to start it. But this is, how I've read it in this instance, right? We come up here, we've broken that high there, and then it's all one straight movement down, right? When it takes up that low, we continue down, and then we pull back up, right? So if I can keep it even more simple, what do we expect after a swing breaker structure? We expect that pullback, and typically what happens is the internal structure shifts bullish to facilitate that pullback, right? So as we pull back up into those premium levels of supply, we would then need to see this internal structure then shift bearish, right? If we broke this low, and then that would be aligned with the swing structure, right? We've had the bullish internal structure to facilitate the swing pullback. Then we take out that internal low. Now the internal structure is bearish, and we expect those bearish ranges to hold until it takes out that swing low. Again, I appreciate this is getting pretty messy, but hopefully I haven't lost you, okay? So black, swing lower low, swing lower high, and then another swing lower low, but the internal structure shifts bullish to facilitate that swing pullback, and it's only once we get that bearish IBOS, right? That the internal structure realigns with the swing structure, and then we can target that low, okay? So that's hopefully you can understand the framework behind why now, although we expect that swing lower high to form and that to go, we also have the bullish internal range. So price could pull back down into here, right? To then break that high, like come down and towards this strong internal low, because this is a strong internal low, but a weak swing low. So, you know, again, if I can draw that on, I kind of just want to find a way in which it doesn't look too messy, but essentially you have this movement here, and then potentially that movement there, right? That would be the swing structure. And then I'm just going to draw on the internal here. So we come down and then we break it here, and then potentially what could happen is we could come in here and then continue higher, right? And then that would be your large internal range. Maybe we'll just leave this to here for now, like the swing pullback. Now, so that's the large internal structure. So to facilitate that large internal structure pullback, what has to happen? Well, you get a small internal structure that then shifts bearish to facilitate the blue pullback, right? And it's only when what? It's only when you essentially get that green structure, I'll change it to green in a minute, shift bullish, that confirms the end. Let me do it now. All right, the green structure, the small internal structure, shifts bearish to facilitate the blue pullback. And it's only once you get the green eyeballs here where the small internal structure then shifts bullish. That then signals the end of the blue pullback, right? And then you'd expect these bullish ranges to hold until it takes out that weak high. Okay, so hopefully all of that framework starts to make sense. If I've lost you, don't worry too much. This is all in the advanced technical analysis module. This is kind of more aimed at for those guys who get that, okay? But hopefully you can see how you're making sense of these complex ranges. And it's quite hard at the start, but eventually you will get there, I promise, with time and patience, especially in some sort of easier market scenarios as well. But you kind of have to hold all of those possibilities in your mind. Again, this could be the swing lower high to come to the downside, but we also have this large bullish range where a higher low could form at any point to take out that weak internal high. So we can look for those longs to do that move and then potentially look for the short in line with swing structure. But also adding to the longs is the fact that this is the 4 hour, likely going to be that internal higher low. We're going to get that movement. So in this instance, what do? Well, maybe you want to wait for the small green internal structure to shift bullish. So then that can signal the end of this pullback, right? Then we can look for longs to target the weak internal high, right, to here. And then potentially we can look for the shorts from within here, right, to catch that potential M15 swing lower high, right, to take out that low. But this is where you may want to wait for a bit more alignment, because at this point it could just be to target this strong internal low, right, that being the higher low that took out that high. So then when you come into here, if that shifts bullish, right, then you can look to target this high, because that's the internal structure. And you can see how it all gets messy. But when the ranges are quite big in terms of, you know, pip size, like where you have plenty of risk to reward, that's when you can be open to taking the longs and the shorts and trading against each other. When you have big expansive ranges that, you know, this is reasonably big. So what I mean by that, like this is Asia, so I won't be trading, but you could go, right, the swing trend is bearish, but you understand that this is probably just the large pullback to come into this level. So you're happy to trade this small internal range, right, into this level here. Or maybe, you know, it goes like this. You can take the shorts from here, take profits here aggressively. Okay, price pulls back into this strong small internal high. Okay, I'm going to take shorts again, but I'm going to take profits aggressively here and then target here. Now, when we come into here, actually, you know, you could look for longs from straight away. You could wait just for an M1 entry. You might want to wait for at least an M15 chalk, because the chalk signals the pullback into this level. But it's only when we get that small IBOS here that now gives us true confirmation that this internal leg is now finished, right? Because the small internal structure needs to shift bullish to signal the end of the larger internal pullback. Now, okay, we have true alignment, but obviously you're not always going to get those nice pullbacks, which is why you may want to get in a bit earlier in case price just does that. And these are all the trading decisions that you have to make, right? And it will all depend, again, on what's the risk to reward like, because if you have one straight movement in, perhaps then there's enough risk to reward to target this level in case it holds. But maybe you get something like this, where there's a high there, and then there's not much risk to reward into this level. So that's when you'll make the decision, okay, rather than waiting for an M15 shock to get long, I'm going to actually wait for the IBOS, because, you know, there's not enough risk to reward to get long here into this small protected high. Now I'm going to wait for that movement here. Okay, I'm a bit worried now. I've gone into way too much detail here and way too many scenarios, but hopefully some of you are kind of getting the framework as I try and do the scenario analysis. And it's the same thing. It's all about trading from strong structure and targeting weak structure. But when you get big ranges like this, you can make sense of all of the little structures within it, and it can allow you to trade it. But if you find it overwhelming, stick to your swing structure, you know, stick to the extreme points, and you don't have to get advanced trying to trade all these moves, okay? So yeah, if I can kind of summarize again, as the weekly market is open, essentially the thing I'd personally be concentrating on is this large internal structure, particularly because we're coming off that 4-hour low and I'm expecting that movement anyway. I'm trying to look to catch this level, but there aren't really any great demand zones other than this zone. This is probably the cleanest zone, right? Obviously led to a decent move. Yes, there's no inducement that didn't sweep liquidity, but I don't know, it's just quite strong. Obviously it flips this range supply here as well. And everything else is kind of mitigated because you have, well, this move's obviously mitigated here. Then price comes in, mitigates this demand here. Yes, there can still be orders, but it's then caused a large movement away. Then you had these sell to buy wicks as price obviously came down intraday and actually mitigated the distal of this level. You can see that, right? Price came up, created the demand, mitigated it, and then continued. So yes, it's only a tap into it and it kind of happened straight away. So, you know, I'm still happy to trade from here, but it's, again, not ideal. Ideally, you want to see something completely mitigated like this level, right? Price came in, mitigated that fractal zone, and then moved away. So this was kind of the most ideal one. But at this point, what do we have? It's just provided a reaction. Well, let's see, let's put it forward. What happened during Asia? We don't actually quite hit that refined pivot, and then do we break and close? Not yet. Then we break and close below. Okay, so yes, we have some unmitigated pivot supply, but basically we have done what? We've mitigated the prior range, and then it's led to another break of structure. Okay, so now this becomes our M15 in small internal strong high because it led to that bearish IBOS, and then you have, well, I'll wait for it to start to pull back, but essentially we're now within this new internal range. So yes, I'm aware there's unmitigated levels here, but for price to get up to them, right, then it's likely the internal structure's shifting bullish. So if price comes up and breaks above old areas of supply, they're just to do what? Just to facilitate pullbacks, and then that's where we'd expect that high low, right? Because this is the range we are now within. Okay. Also at this point, we've reacted to demand, right? Clearly failed to put in a higher high. We didn't do that. And then broke structure to the downside. So now we've basically flipped from demand to supply. So anywhere between the base of the reaction to the top of the reaction, between those orange lines, that's essentially your whole flip zone. But obviously that's quite large, so we want to refine it. Okay, so we can refine to these levels up here. Right, and you have that M15 supply here. I'd probably just cover that whole candle, just because you don't need to be super refined in this instance, as it's quite small. So let's play it forward a little bit and see what happens. Okay, so now we have a bullish change of character. Right. So what does a chock signal? A chock signals the start and end of an internal pullback, right? Because that's your internal structure, which is giving us the large internal pullback. When we get a bullish chock here, does that signal now that this large internal high low is in place? No, it does not. Now all that signals that chock at this point is it's just the pullback of this leg here, right? That's all a chock signals. It's only when you get the bullish IBOS here that signals now this internal pullback is likely over of the larger structure, and now we're going. Okay, so at this point, that's how I interpret this chock. Yes, it's the first potential signal that this larger high low could be in place, but it's not until we get that IBOS of the small internal structure, right, that then we have the true confirmation. Okay, so the fact that we'd already had a reaction from this pivot candle demand, failed to put in a high and flipped to the downside, and had another bearish IBOS, although I'm still aware there can be orders from within this zone. I'm more leaning towards the fact that this high is going to hold because we've already had the failed reaction, right? So essentially this has flipped this level of demand. It led to a bearish IBOS. The structure is still bearish. Obviously swing structure is bearish as well. So I was pretty happy to look for shorts from within here, target that weak low, and then look for potential longs from within here. That was basically my thought process at this point. But of course, there's still the possibility. It's a lower possibility based on the framework that we use, but still a possibility, right, that this could hold. This demand could hold that caused the chock, right, and you could then break up to the upside. So you may want to take longs from within here. I would just as long as you're aware that, using the confluence in the frameworks that we use, I would view that as lower probability because you're essentially trading from a weak internal low at this point because it hasn't broken high and we've already reacted from this demand, failed to put in a higher high and flipped it. So I'm viewing this zone as still valid because of course it's valid until price trades through it, but I'm only viewing it as enough of a reaction just to facilitate a move into here. So at this point, yeah, I'd be more open to trading this long from here. Like imagine if price came down, it was session timing, blah, blah, blah. Yeah, you could look for a long from within here because it hasn't already pulled back yet. But if price moves up like this, comes into here and then comes down, do I want to be buying from here now? No, because that chock has already done its job. It's already, come up to supply here. It's failed to break the high, and now it's coming down. So why would I want to buy against that? I understand that this could play out and do that, but is it where I want to get long from? No. If I'm short, would I take profits here? Yes, because it could provide a reaction that could stop me out or do that. But is it good enough to take a position long from here? In this specific scenario, for all of the reasons I just explained, no. Okay, cool. So let's play this forward again. Right, so this is what I mean, right? Now we come into here. So if this was, I mean, this is before, way before, it's still during Asia. So I'll just kind of fast forward it now to pre-Frankfurt, which is around here. Okay, so at this point, this is what I was saying. I'm aware that this zone could hold, right? Because obviously there can still be orders from within here. It could be a demand chain forming. We know that the larger internal structure can form that higher low at any point, and that could be the movement, especially with, you know, the 4-hour mitigation, right? You always have to bear in mind all of the pieces of the puzzle, and that's why it's different every single time. And you will get here. I appreciate this is a lot to think about, but you know, just try and take it in now as best you can, and revisit this as many times as you need, you know, over the coming months throughout your journey. But yeah. So this is what my thought process is. I understand longs could work from here, but I don't really like it. I've already kind of missed the ideal short, which would have been up here because it was during Asia. So at this point, we're in the middle. You know, is it ideal? Not really. I don't really like this, but my main bias is I'm expecting probably a bit of a bounce from here and this low to go, and then I'll look for longs from within here. But even this I wasn't in love with because, like I said, it's not the most obvious of demands, right? It hasn't really flipped anything here. It's kind of just part of this reasonably corrective leg. Like it's not great. There's not much to it. So really, when price comes into here, I'd either want to see that M15 chock ideally, and then have enough risk to reward up to that next strong high, or like I was saying, like wait for a clear IBOS to then realign the small internal structure, which would then signal that that large pullback is over. Right? That's kind of what I'm thinking at the point. I wasn't really in love with anything. Okay. Now this is where I'm going to drop down to the M5, where you can clean things up a little bit, right? So what do we have? Well, if you like that same bias that I have, which is you think that M15 small lower high is in place, and we're now going to take out this low, well, where could that happen from? Right, we can see that really the only kind of unmitigated M5 level was here. Yes, there's the wick above, but you know, it's unlikely price is going to come back when we start to paint the picture a little bit. So can I use this sort of turquoisey color to show the M15 here? Now there is an unmitigated extreme here, right? You kind of have two POIs on which you can look to short from, and then this level here. Now, it's not ideal when this happens, because what would have been really ideal is that this movement here, right, had mitigated that distal and then moved down, because then I have super high conviction that if price comes up, this is a great probability to short from, because it's either going to go, or if I'm wrong, well, it was only POI. It's essentially the unmitigated extreme. Okay, but in this instance where it hasn't quite mitigated it, you know, it didn't sweep in liquidity and there's no inducement, there's always that concern in the back of my mind that price could come for here and use this as inducement. Okay, but because it's literally like, I don't know, a pip, half a pip or whatever, and also this one here flipped this clean level of demand, right? This for me became a pretty clean M5 POI. So I was basically just going, right, well, I'm just going to view that as that range, that supply range essentially mitigated, okay? Because we swept liquidity, pricing came down, reacted from demand, mitigated the supply range here, failed to put in a higher high, and then flipped to supply. Okay, so following the mitigations, following the flip, this became a pretty good level. So I considered setting a risk entry on this. This is a nice M5 entry as well, for those of you guys who trade that. So I dropped down to the M1 to refine it. And this is where I then set, or was considering, sorry, setting an entry, a risk entry, right? But then, you know, I was kind of umming and ahhing. I didn't, you know, just seeing how long it's taken me to explain the higher time frames, it's all very conflicting signals. Also, I hate ultimately trading, right? If you just zoom out for a minute, and it's quite off camera, but there's a little eye icon if you come over here on the left hand side, and you just click it once, and it hides all your drawings. Look at this. You know, if you were to just look at that quickly, right? Can you see clear direction? Is there clear intent here from the market? I would probably say no, right? If I just get my paintbrush again, I think all the drawings will come back on, but essentially it's in the middle of here, right? And this is always the lowest probability to be trading. This is where people get chopped up. So all of that's in the back of my mind. You know, it's not ideal, right? So this is kind of another reason as to why I'm trying to explain why I didn't have high confidence, just, you know, whacking a risk entry on it. Typically I want to do that when I have a lot of high confidence, but, you know, ultimately it was pretty clean and there was more than enough risk to reward. So even if you just target this low, let alone down into the M15 weak demand, and really ultimately we want to be targeting this week small M15 low, right? That's the movement. So there's decent risk to reward from here if you can get that M1 risk entry, right? Even if you enter on the distal, which is what I'm doing at the moment. I'm always entering on the M1 distal and then stop behind. So in this case, obviously you don't have a clear candle, so you would take that wick. In this instance, let's give it a bit of a buffer, 2.5 pips. And let's just say we just target that low. About 5 hours typically what I want, so I'd be happy with that. So that's what I weighed up, that's what I considered. Didn't set this, but I'll just leave it on for now. So price was pulling back, and then it didn't obviously I can't even get my words out, mitigate anything, it's just messing around. And then it swept those lows, and then this is where on the M5 it failed to close below here. Let's just quickly show you. So, you know, yes, the high did manage to cause a wick break, but it didn't cause anything to close below. I definitely wouldn't not be looking at this in this instance, because this pullback didn't mitigate anything. I mean, yes, it mitigated the range, but, you know, it's more that we're right in the middle here. Like, we're in the middle of this small range, we're in the middle of the larger range, we're in the middle of the swing range, we're in the middle of the 4-hour internal range. It's just, you know, that's not where you want to be trading. Whereas this, hopefully you can kind of see how this makes a lot more sense if you're going to want to take the risk entry to leave your order on here and not force it here. Yeah, hopefully that's kind of clear. So then on the M1, please do not do that. There we go. This is where, you know, you can leave your order on, and this becomes nice inducement for this POI. Just going to drag these across. So I personally didn't set the risk entry here. I was waiting for an M1CE, but as you guys probably know, if you've been watching Price Action Live or whatever, yeah, that was the chock. So then I set a limit at this point on the extreme, but then cancelled it shortly after, as price just basically at this point, I think, yeah, when it swept that low, I just cancelled the order then, as I don't want to be involved if price comes back up towards that high, really. But yeah, that would have been your nice, well, just over 5 hour there. And obviously if you target a bit lower, I can't remember what happens exactly now, I think it goes a bit lower. Yeah, there we go. That would have been 6.4 out of there. So yeah, so that was that trade. And now if I just bring you back to the M15, so I'm just going to fast forward, yeah, it has, but just bring back 1 sec on the old bar replay. Cool. So, sorry, I just lost my track of thought. Yeah, so we took the short from there, right, which is essentially your M5 supply, and then looking to target this level here. But remember, this is a weak, so draw on, small internal low, because it failed to take out the high, right? So here we go. M15 weak. All right. So although this is weak, it's not one I necessarily want to trade long from, but if I'm short, I will take profits there, especially when like you don't have much risk reward, because it can give a reaction that could stop you out, or we still know there's a possibility that could be the movement, right? So yeah, just wanted to explain my thought process there. So then price came into it and then shot up. There was some unannounced news announcements from the ECB when the central bankers basically said that they want to do a bigger hike, or he thinks there should be a bigger hike in September. So again, not going to get too caught up in fundamentals here, but basically that is a bullish little bit of confluence on its own, because it's leading to, you know, higher interest rates, and if you hold the euro, you're going to get paid interest. So that's a slightly bullish sign. But yeah, quite convenient that it happened just as it taps into demand. It's quite funny how the technicals very often align with that. But anyway, same price spikes the high, but obviously fails to close above, and it does reject this level here. Is this somewhere I would personally leave an order on? No, just because, you know, well, the internal structure is essentially shifting bullish at that point. So that's what I was saying. For me, then old internal supply just becomes a reaction point for pullbacks, okay? So if we drop down to the M1, you know, you could trade this sweep down to downside, but I mean, there's no entry there anyway. Like on the M1, it's all just very, very volatile, massive. Now, this is one where I feel like a lot of new people, sort of newbies to this style or in trader, can get very caught up in these levels. Now, of course, at times they do play out, but I practically almost never trade these sort of zones when they're like one big news push announcement, no inducement in the leg. As they typically often fail, I'm very, very aware of them. I do not like trading them. I just feel like they fail a lot more often than they play out. But to give you even a more mechanical way of why you wouldn't want to trade from that low is because look what was going on in the M15. Always use the higher time frame as your guide. Don't get lost in the source on the M1, right? What happened? It reacted from this weak level, clearly failed to close above, and now is coming back down. So this strong internal structure is still intact because we need a candle closure, right? And you want to trade away from sweeps, not into them, right? We swept the high and we're coming back down. So that's what we want to be trading. We want to be trading short, you know, if you're trading in line with the sweep. You don't want to be buying against a sweep, right? And that's why, you know, we have the V shape and the sweep. That's why we want to be trading away from it. As in, what I mean by that is we want to be like buying away from the sweep, right? We want to be buying here. We don't want to be shorting through a sweep. That's what I mean by trading away from a sweep, okay? So we drop that down to the M1. Cool. So now, yeah, that's a weak low. I'm not personally interested at this point. It's very, very indecisive. It's choppy. Let's see what it goes. Then we sweep the low. So now at this point, I'm thinking, okay, well, now you could take the longs because whilst the internal trend is still bearish because we haven't had a candle close, again, you might want to trade away from the sweep. Obviously, we've got the large internal structure on our side and the 4-hour structure as well. So now maybe that was the liquidity sweep it needs, right? It takes the Asia low, takes the Asia high. Maybe now that's a manipulation and we're ready to now continue to the upside. Okay, my bias is always going to be like the higher time frame you go, the more significant. And I quite like this overall movement, especially after sweeping that low. And if I can get in at the bottom of the range, at least I can take my profits up towards here, right? If we continue down. Obviously, as we're about to see on the M1, there's no entry. There's massive candles. There's nothing I'm going to get involved with here. It then corrects in the middle, gives a continuation, and there's confidence here. I can see it. There's always an element of me in the back of my mind goes, yeah, just take it. Like the odds of it coming all the way back down here are low now. Like it's ready to go, but it's not the type of setup where I have a lot of confidence on. Like, why do I want to take this? Well, just wait for things when they're super clear, and as we can see, we're rocketing. So it's painful to look at, but you have to stick to what is going to consistently work for you. And for me, that's a bit of a middle of nothing. Like it's hard to say because my gut instinct, I had decent conviction that this is going to continue up after you've seen that sweep, but do I want to trade in the middle of the range where we've swept the high and swept the low and it's all indecisive? Maybe some of you do. As of me right now, that's not the type of trade I was really happy to take. So now we've broken up. Now what do we have? Now we have that's basically your sweep, which then eventually led to the M15 small IBOS. Okay, so now what we have is, you see how it all aligns. This is the framework, right? We had the large internal structure, and we knew that at some point that was going to look to form the internal high low to then continue to take out that movement. So in order to facilitate that larger internal pullback, what happened? The smaller internal structure shifted bearish to facilitate that pullback. Then it shifted bullish. So at this point, when you get the candle closure, now you have confirmation that that larger internal high low is most likely in place. Obviously, it's the large internal high low is not confirmed until you get that. But this small IBOS is the signal we use to confirm that that pullback is now likely finished. And now we can target that weak high, which we haven't quite taken out yet. But hopefully it's now clear as to why we use that framework and we use that for those confirmations. Okay. And yeah, that's essentially what is going on at that point. So that was a lot longer than expected. I expected to do a quick 10-minute breakdown there because there wasn't any trades that I took, but I think this is a good example of how you can use those internal frameworks to make sense of what is quite reasonably complex structure. However, when you really understand this and you get it nailed down, I don't want to say it, but I find this quite clear and quite let's say easy to analyze, but obviously trading it can be a bit trickier because you have conflicting signals. So you just have to, it's kind of what I was trying to explain earlier. When you're playing these ranges, you want to just be a little more nimble with the targets if you're happy to trade it. Or not, just be patient and wait for it when everything is a lot more aligned. But ultimately, don't lose sight of the bigger picture, right? The big idea is that we pull back into this 4-hour strong low and we're expecting that movement, right? That's the main idea because for me, the 4-hour takes precedence. We then had the larger internal structure, big impulsive movement up, nice corrective pullback. So we know we're expecting that higher low to form. But it didn't just quite set up really for me. It would have been nice if there was a nice little M1 entry here after that sweep. Again, a bit more aggressive, but looking for that overall move. And then just a shame I didn't get tagged in for that quick short into here. Just trying to play the internal pullback, right? Cool. I'll leave it there. As always, any questions about this, drop them in the Discord and we'll try to help. Cheers, guys.